Lending Technology Think Tank. My name's Colin White. Thanks for joining us this morning. I'm the founder of Credit Connect Media, and this morning we're going to be talking about lots of different areas within online lending technology. The reason we've created this event is to bring together lender and credit professionals to discuss strategies, assess technological innovations that can play a role in producing the best customer outcome as we begin to emerge from what we hope is the end of the COVID-19 pandemic. At today's event, we've got 4 sessions planned. So here's an outline of the event for you. I'm just going to share that with you. So give me a second, here we go. So first session, which I'm going to introduce shortly, is the future of lending. Each session, we've got a break in between. So unfortunately, you have to log in and log out, but that's just to make sure people can log into and watch the session that they're interested in the most. Obviously, then we've got 10:45 credit risk, 11:55 open banking, and then we'll round up at what it says 1:05 there, but it's 1 o'clock fraud session. So that will be great. Just want to run through as well. You can see, obviously, for those of you viewing, there's a lot of different options on the platform that you can see on your left-hand side. I just want to talk you through that really briefly. So you've got an I button at the top. That's obviously the information that you can see about today's event, the sessions, etc. The important thing I want to point out on here, the second option down, is the conversation box. That is, so you can ask questions. We'd love you to be part of the event and ask some questions on there. And we'll put them to our chair and then to our panel and see if they can answer some of your burning questions. The next section is obviously some information on our speakers. So you've got a bit more background about them and what they're interested in, what their background is. And then a bit of information on our sponsors today. So we've got sponsoring this session is Paribas Data, and then we've also got Credit Kudos, who are coming up later, who are speaking on our open banking session. They're sponsoring that session. So we'd like to thank them for their support on this event, because we can't run these events without the kind of support. So thanks to those guys. And then if you go to the final tab, which is like a file kind of button, if you like, that's got information on Credit Connect and the event and our sponsors and some stuff you can download and take a look at. So have a walk through that, maybe in the breaks or throughout this session. So what we're going to do is basically try and get you involved as well with our social media if possible. So have a look at the LinkedIn and Twitter, #LendTechTT if you want to comment socially as well. That would be brilliant. In addition to this as well, we're going to run a number of opinion polls which appear in front of your screen throughout. You can cancel them if you want, if you don't want to take part, but they are anonymous, so we'd really like you to be involved with that. Across all the events that we're running now, there's a body of work that we're trying to create some white paper research. So if you can respond, that would be fantastic, and hopefully we can share all that with our audience post-event. And also any questions that we don't manage to get through in each session, we'll share that in our write-up afterwards as well. So anyway, enough from me. Let's begin our first session, which will discuss the future of lending, which is, as I mentioned, sponsored by Paribas Data. To open the event, I'll hand you over to our chair for the day, who's worked really hard in the background to help create this event with me. His name's Chris Warburton. He's the Director of RO Strategy. Good morning, Chris.
Morning, Colin. Thanks very much. So if we're going to start the first session, I mean, a little bit about me first, I suppose. So my name's Chris Warburton. So I'm going to be chairing the event today. So those of you on all day will see quite a bit of me, fortunately or unfortunately. But a little bit about my background. So I've sort of spent what is like probably the last and I lost a decade earlier, but probably the last 30 years in risk operations, really just sort of looking after and running processes across the customer life cycle, you know, from front end lending through to back end, sort of like credit collections and fraud as well. So I'm currently the director for RO Strategy, as Colin mentioned, and at the moment we're working on a series of videos, really exploring some of the latest ideas, innovations, and technology in credit and collections. So it really links in well with this kind of event as well. So that's perfect. And I know we've got a great line of speakers today, some really great conversations from some of the conversations we've already had. So I'm here to sort of moderate the event and introduce everyone.
Great, thanks, Chris. So if you could introduce our panelists, it'd be fantastic. Thank you.
Okay, fabulous. So let's start the first session. So as Colin has mentioned, the first session is on lending futures, really talking about the technology landscape. And with us today, we've got Dean Elliott, who's the Head of Innovation and Digital Product Delivery at BNP Paribas Personal Finance. We've also got Steve Peacock, who's the Chief Risk Officer for Think Money, and Steve's on the phone. And we've got Jason Wassell, who's the Chief Executive Officer for the Consumer Credit Trade Association, the CCTA. I get that right. So welcome everyone. And I don't know if each of you guys just want to give just like a 2-minute, maybe just brief introduction around what you do and what your role is in each of the organisations. Dean, do you want to start?
Sure, I'll begin. Morning, everyone. Dean Elliott. I look after innovation at BNP Paribas. We've been looking right across the customer journey from acquisition through to cross-sales and customer value development, and more recently, particularly during COVID, collections and supporting customers in financial difficulties. So, developing propositions across all three of those big use cases.
Steve?
Yeah, hi, good morning, everyone. Yeah, I'm Steve Peacock. I'm the Chief Risk Officer at Think Money. Think Money are a payment services e-money business that provides a current account to customers. And budgeting, basically, I'm a traditional Chief Risk Officer, I guess is the best thing to say, the best way to describe it. I look after and oversee all the risks, be they regulatory, be they technology, be they operational, whatever they might be. And obviously the last 12 months has probably been one of the most challenging and equally interesting times of my career, sort of dealing with a range of risk issues that probably not faced before.
Okay, yeah, perfect, absolutely. And Jason?
Thank you very much. Yes, my name is Jason Wassell, Chief Executive of the Consumer Credit Trade Association. I've been in the role for 100 days, so I'm quite pleased. I've got the brand right there. There was a good chance I was going to talk about my previous association, which is the Consumer Finance Association. I think what both of those associations have done, and what I've been working on for the last, I think, 6 or 7 years now, is representing alternative lenders. Now, we could have a couple of hours on what alternative lenders means, but it is the kind of non-bank lenders, the non-mainstream lenders, and we represent them, and I represent about 200 of those firms, which will go from the very, very small one-person operations up to major PLCs as well. So that's my position.
Okay, fantastic. So you can see we've got a great sort of range and breadth of experience on the call. And I think today, this session here, we're going to talk a little bit about the future. You know, as much as what's happened over the last 12 months, and we've all lived through that, we wanted to almost like take this point as a bit of a starting point to say, well, you know, where do we sit today, and then where do we go forward? You know, what's on the horizon, and particularly what do we need to think about? So it's very future looking. So to start off the conversation, to start off the conversation, I'm going to probably look back a little bit, saying so we've had COVID over the last 12 months. I mean, what do you think the long-term impacts of that going to be as we do start to look forward? I mean, Jason, do you want to just with your background, do you want to maybe start with that?
Yeah, I think absolutely. You've got to kind of take a look back to understand where we are just now, and then start moving forward and thinking about what those strategies look like. I think the problem is, and this is the problem that you see with many strategies, is that we start with this imperfect picture, and normally that would involve looking back at history, researching, trying to kind of perfect the information that you have so that you've got a better position to move forward. Unfortunately, we don't have any guide rails on this particular journey, on this particular ride that we're on. We can look back at past financial shocks, say the credit crunch, which I went through as well, but that only takes us some of the way. My understanding is the income shocks that we've seen across society, across communities, has hit across different demographics as well, that there are very highly paid individuals in particular sectors, hospitality, entertainment, retail, culture. There are many individuals that find themselves in a very difficult position. Some of them may be able to mitigate that through furlough schemes, and higher paid people sometimes have been kept on during the pandemic. But we also know there's a very big group there in terms of middle and high earning individuals that would label themselves as self-employed, and they find themselves in a really difficult position just now. Meanwhile, there is a group of lower income workers, employees that traditionally we'd be concerned about, and we would look at, particularly in the public sector, maybe in big retail supermarket workers. Traditionally, we'd be looking at there and saying, well, that's an area of risk. And yet these are customers, these are individuals with some of the best job security over the last year, and also access to additional revenue in terms of income and additional shifts. So I think that's really, it's really difficult for us to kind of think about what the future looks like, because it's very hard for us to understand what has happened over the last 12 months. And so it's hard to understand what the changes are. Are there changes in consumer behaviors? Are they temporary? Are they going to be permanent? And I think that's complicated even more by some of the regulatory concerns around interventions or initiatives like data masking, where individuals have not been keeping up with payments. But if lenders look at credit files, it seems to present that they're on track and everything is fine and rosy. So I think it's made more complicated by some of the things we've done to ourselves as well. And I know that that's where we are just now. And I know that every day lenders are going to be looking at what tools they need to understand that, what new information. And I'm sure some of the other panel members will have some ideas about what that looks like in terms of developing those tools and grabbing that information, so we have a better picture going forward.
Yeah. So you talked a bit about how, the last 12 months the data's changed, and looking back to 2008 and using that as a bit of a guide. But I mean, we're still in a changing situation. And particularly some of the performance data changed with some of the, with some of the, I suppose the support schemes that are out there. I mean, and we could even see more change going forward. And I was going to ask the question. Maybe this is to you, Steve. Just a little bit about what's changed. How do we need to think about things differently? Do we need to think about the risk profiles differently going forward? I mean, Jason, you just talked about there being sort of like differences in different parts of the population. I mean, do we need to think about things differently going forward? I mean, how's best to assess that? It's almost like from your background and your role, and do we need different products as well?
Yeah, I think absolutely. I'd echo a lot of what Jason said, really, and I think just sort of taking a step back, I think that the pandemic was almost like the classic tale of two halves to a certain extent, and I still think we're coming through the second half of it. The first half was very much about getting people working from home, keeping people safe, businesses hunkering down, if I can put it that way, and looking after what they'd got. Because if we take this time last year, there was a lot of uncertainty, and nobody knew how long this was going to go on for, and what the impact would be. And and you saw lending in particular sort of lenders retreat quite a bit, in terms of because they were looking at the income shocks, what might come, and whether industries, sectors would recover from that, and when they would recover. The second half, I think, we're in the second half now, and it's still evolving. I sort of see that it's sort of become the new norm, as a phrase that's bandied around quite a bit, where you see technology has come to the forefront. A lot of it was there already. A lot of the stuff that we'd probably take for granted with some of the big retailers, such as the Amazons of this world, has sort of been adopted by financial services to let customers transact a lot more easily where they are. And I think, in fairness to sort of financial services, they were already on that journey anyway, but I think it's been accelerated. But I think, to the broader point you make, in terms of products, I think people will, I think lenders will look at, take a longer term view in some instances. They will definitely look at sectors. They will look at the fragility or the volatility around sectors to shocks and various things like that. But they will also look at, sort of new entrants to the market, like people who are graduates, and I work with a startup business sort of in the spare time, and they're looking at, graduates that are coming out of university and looking at predicting what their income will be and what their credit risk will be in the future based on the degree they've got, where they've gone to university, and the sort of trajectory of students that have come out of that university. So I do think we'll see more and different types of products come along. I think we'll see a lot of the lessons learned through the various forbearance measures sort of come into product design. And I also think what you'll also see running a lot more closely with lending and financial services products in general is a real look at customer vulnerability. It's really sort of highlighted just, what people go through and different triggers for vulnerability as well. So I think that will start to, will feature more prominently in product design and what products are offered by financial services businesses.
So it's almost like some of the experience we've had over the last year was almost like get wrapped up into the product design up front, and maybe it's almost like with everything's been thrown up in the air, it's almost like do you recut things slightly in terms of applicability from a product point of view?
Yeah, I would agree with that. Yeah, I think there's definitely that shock where, but we'll probably still see the same types of products. I think we'll see some different products as well, but I also think we'll see more insightfulness from lenders and from financial service business in terms of how they construct those products, what those products look like, and how they go to market with those products.
Yeah. So you mentioned digital, and I was going to go to Dean just a little bit around digital. I mean, digital sort of dominated over the last I'd say over the last sort of 12 months. It's been one of the ways we sort of kept our businesses going. I mean, what do you think it's changed expectations? I mean, some of the stuff that you've seen, have you seen sort of changes of expectations of consumers, of businesses? I mean, and do you think that's going to persist? Sort of going forward as well?
Yeah. So. It's, as we've all said, I think COVID's accelerated stuff that people were already doing. So if you ask every company if they had a digital strategy, they'd say yes. But perhaps it wasn't as quick as what the last 12 months have forced us all to adopt more agile, and actually more of an MVP type approach. So many companies who are working on a very 2 to 3 year roadmap have had to do things in 6 weeks and 12 weeks that they might have taken 2 years to do. Yeah. And that, I think, is something that will last with companies because they've learned that they can do things quickly. As they don't waste a crisis. So it did force companies to move quickly. And we certainly found that ourselves in terms of getting digital solutions ready for consumers based on the FCA advice. We had to move super quickly with partners and work in a very agile way. And I think that's given us as a company confidence we can do that more often now as well. I think coming back to your point on consumers, thinking about our own behaviours, I leave the house now with my car keys and my phone. I'm not sure I always take my wallet because of the rise of Apple Pay. So it started to drive, we kind of knew cash was moving out, but I think also whether we'll have plastics with credit cards in future, I think that's going to be a very interesting conversation, isn't it? So the rise of a number of virtual credit cards where your card number's in the app and you use Apple Pay to pay, it's really perhaps not just digital, but I think some different adoption of some different technologies that were there but have really come forwards. I think customers, when we talk to customers, they like control, but I think COVID's proven that you also need flexibility. So products that have got the ability to create, to add a payment break, whether it's from us as a lender being able to implement a credit break, a payment break when customers need it, or customers being able to press that button and ask for it themselves. I think customers will look for control, but they'll also start to look for products that give them that flexibility as well. We're seeing the rise of more flexible lending where people are using installment plans rather than a typical credit card. Companies like Time It coming in with virtual credit cards that use installment plans rather than a typical, you've got a credit card balance, which is a mass that you can't really manage. You put all your purchases on installment plans and you can manage each one on its term. So I think flexibility, because customers will think, actually, what I'm taking out needs to be flexible just in case.
You mentioned around
if I could just jump in there, I'd completely agree with that in terms of flexibility point. And I think the other thing I'd just probably add to that is that I think firms, they've done this probably for a while, but I think to the point that things are being accelerated and come more to the fore, it's never been true in that. I think lenders in particular and financial service businesses are taking a longer term view of their customer relationship, in terms of how they work with the customers, how they recognise that it's never a smooth straight line relationship. There will be bumps along the way. So I do think that's one of the things that will come out of this, and is coming out of this, in terms of, initially with forbearance measures, but in terms of how things are developed to design flexibility into a product and service offering.
I think somebody who represents alternative lenders, and the reason why they're alternative is because they serve either alternative customers, provide alternative products, have alternative business models. So that's really why they're alternative. And I think one of the things I would say is that we can see that in there's a number of companies out there that are innovating and kind of adapting and providing alternative products. I would say, look back to one of the oldest, one of the older financial products we have. Home collected credit has the ability to pause at any point. Just tell the collector that you are unable to pay, and it'll be put on pause. There is no additional cost. The loan just carries on. And that's been there for, I guess, 100 odd years. But it's there with no detriment to the customer. And it's that kind of flexibility that we need to adapt. But it's not new. There are people that have been doing it for a while. We just need to make sure it spreads now across the entire sector.
Do you think it's going to spurn investment in new technology? So a lot of people have been sort of sitting on, let's see, older technology, and a number of people who said, like, I just wish I had this capability. I wouldn't have had all this panic over the last 12 months. Do you think, we sort of got through that over the last say 12, 18 months or so, and we sort of, we managed and we put in workarounds. But do you think it's going to spurn like a whole new stream of investment, or do you think people are going to take a step back, or do you think it's going to be, once it settles down, we'll be back to sort of more of a BAU?
We're certainly seeing, a lot of our business we do work with partners in terms of point of sale lending, and obviously huge changes in terms of emphasis over the last 18 months in the shift to e-commerce. So we're certainly seeing that a lot. We were already doing it, but we're doing it more in terms of focusing on that user experience. So you may have a website, but do you really understand what consumers are doing on there? Using tools like Hotjar, so you can kind of almost have a customer lab to see what customers are doing on your site or through your process. And we found it's not just building something; it's about optimizing it for consumers and ourselves. So a lot more investment in terms of developing that journey and asking customers how is it for them and how can we improve it. So certainly on the front end, Chris, I'd say there's a lot more investment and appreciation that you need to make that journey really easy for consumers, and mobile first, right? Everybody carries around this digital pacifier in the hand nowadays that they use every time. So mobile first is big in terms of investment as well. What I would say, just to Steve's point, I think linking to vulnerables, there are some things we need to be careful of in this move to digital. So we need to make sure that we don't leave vulnerable customers behind. It's really easy to design a journey for the average consumer. And I think part of the reason the FCA and some of the regulatory bodies are asking us to focus on vulnerables more is to make sure we don't leave anybody behind in this kind of revolution, and that we make sure we design journeys that can switch channels, and you can opt out at any point and get some help, whether that's through web chat or a person on the end of a line. So I think whilst we move to digital, we need to remember some of our customer segments and make sure we can work for everybody.
I mean, so this is one of the questions that I was going to ask, which is really about how much do you think the regulator is going to get increasingly involved? Is it going to be an increasing landscape? And it was there's some guidance that came out right at the very start. But I mean, what do you think that's going to look like over the next couple of years? Is it going to be more involvement, less involvement? Is it going to be more regulation? I mean, any views on what's on the horizon?
I think from a trade association perspective, certainly already we've been brought together with the FCA to talk about what they've seen in terms of performance of lenders up to now and what they're looking for in terms of tailored support as we move forward. So, I think I came away from that meeting and with hindsight, it was the most obvious thing, isn't it? That they're going to be taking this very seriously for many years to come. They understand that there is a knock-on impact in terms of particularly with the masking of information and things like that. The impact on individuals will not be known for some time to come. And I think you referenced some of the government schemes that extends it on even further. So it's not as if we've had the impact and we're now seeing the consequences. There's a long kind of impact there that's kind of been brought and kind of widened out, and there will also be consequences that will go on for years. And I think the regulator has been very clear that this is a priority, that it is something that it will keep asking questions about, that it's not going away. So that's my experience from a trade association perspective.
Yeah, I would agree with that. I think the regulator's already moving in that direction, to be honest with you. I think in fairness to the regulator, they've always had a keen interest in how technology delivers products and services. And I think as there's been technological jumps, if you like, particularly with, the digital first that a lot of firms are going down, you see in the regulator already talking about vulnerable customers and the lessons and learnings that it took from its own surveys, its financial life surveys last year, in terms of now putting that on firms' radar to say, look, it's a broader topic now. And I think the other thing I'll probably just throw in is you take the whole concept of operational resilience, and you go back over some of the it's quite well-known IT outages that took place sort of over the last 2 or 3 years, the dependency on tech and providers and things like that, and what that means from a customer if they can't access funds or they can't access their account or they can't transact. I think that you're almost seeing that coming through already, and again, at quite some force really, and understandably so. So I think, issues around how tech develops, how firms, what their technical strategy is, and how they link that to customers, and how they don't leave anybody behind, and also how they use data and all that. I think that will just grow in prominence over the coming years.
I mean, it does feel like the increased use of digital just gives us so much more data, and that's. I mean, we thought we had a lot, and it feels like every time we roll out more digital stuff, we have even more, and there's probably even more that's out there as well, which probably gives us more insight into consumers' behaviours, which can help us with lending, I would imagine. Yeah,
it's worth thinking about different segments of consumers as well. So. A segment like millennials, so those folks who are born after 1985, I think, they're more eager to share stuff digitally, but they tend to have weaker files. So some technologies you mentioned in a broader context, the digital like open banking, I think are really interesting in terms of allowing sort of, unfortunately for me, younger consumers to improve their, how we view them as potential lens. So I think that open banking is a really interesting area. Again, we need to make sure it's not exclusive to those people who are tech savvy. So we need to make those journeys really transparent and really easy. But we've certainly found that integrating open banking into the journey, where credit files might not be so strong, can give you that real added dimension to make a better, smarter decision. And it empowers consumers, right? So, they can see where they're at. There's nothing better. It is. I think it opens up new technology around money coaching. Really interesting in the aggregator space, how you can use open banking data to get the right deal for the right consumer at the right time. So both sort of all the guys on here have mentioned it, but I think data working together with digital is a kind of 1 + 1 = 3 equation, if you can do it right.
Yeah. And I suppose that was on a call earlier about the whole sort of thing around pre-population of forms and using the data in the background to sort of help you do that and sort of make that in terms of like easier customer journeys from a lending point of view. Go ahead.
I think what I was going to say is that I think some of the technologies that will be around to use data. So, right now it's about having the right people and the right tools to then use that data. Otherwise, you're sat with a big data lake and nobody can kind of swim in it, for want of a better expression. So, there is an investment. You talked about investments earlier. I think a smart investment is around your data architecture and making it easy to get the right. And then the second bit is about getting the right people in who can use that. Because it's the people who will make sense of the data and work with others to work out what to do with it. So I know we're talking a little bit about technology, but I think we're all sensible to know it's not technology on its own. You need good people to make that work.
Yeah, so that's a good point. So almost like as we get to the end of the pandemic, I mean, we've gone much more digital. We know there's going to be almost like an avalanche of data, and it's almost like set up the infrastructure to be able to handle it, because then you can build that into the processes that can then help you with future lending, the customer, the customer experience, the lender experience, those kind of things.
Yeah, you got to, at some point we need to make sense of all this, and some clever folks who can churn through that data and turn it into something, data into insight is the key.
Yeah. So I mean, Steve, you mentioned a little bit about sort of like there's a bit of a hiatus in terms of lending. I mean, do you think there's pent up demand? I mean, just as we sit here today, we're talking about the future. I mean, do you think there's pent up demand where for the market? And I suppose just looking out, what's happened in terms of like potential financial difficulty out there, the economy. I mean, do you think lenders are raring to go, or do you think there's still some hesitancy?
No, I think there's an understandable cautiousness there, is my sort of reading of the situation. But I think lenders are back in the market. You just have to look at the demand for mortgages. Again, a little prompted by help that the government's provided around stamp duty and things like that. But yeah, I think people are looking to take on credit as well and do things there. So I think it is coming back, and I think we're seeing lenders start lending again. I think and as I say, I think there's a degree of cautiousness there in terms of lenders will look at the situation, that there's perhaps not the same uncertainty this side, in the early part, sort of towards the mid part of 21, as there was at the back end of 20, with other waves coming through and what that means. There's a very clear roadmap from the government and a vaccination program which has provided confidence to all parts of the economy. So I think we're starting to see that come through, and I think there's been some interesting aspects of the pandemic as well. If you sort of take things like new car sales, I mean, they dropped to a historic low, during the course of the pandemic, which was probably understandable. But as people have sort of looked at going back to work and various things like that, as the sort of government roadmap was announced, then I know, again, it's more anecdotal than hard evidence, but I know a couple of people who work at car dealers, and they've had some record months where people are starting to go and sort of purchase cars. So I think we're starting to see more of it come back, and I think we'll see some strong lending return during the course of this year.
Do you think it's been a bit of a case of like the demand's always been there, but it's just got very lumpy over the year? I mean, people want it, so they hold things off, or do you think it's really, really, really dropped?
I think there's a bit of substitution there. I think instead of spending it on a holiday, the people have spent it on other goods like cars and things like that along the way. When they've had a bit more certainty around it. I think there's always been a demand for credit there, but I think naturally lenders, a bit like the financial crisis of sort of 2008, sort of took a step back and thought, we don't want to be hit by loads of impairments, and they've probably seen a degree of impairments coming through as people were on furlough or losing, in some cases, losing the jobs. There's been some lenders who took quite a strong stance on the hospitality sector and wouldn't lend to them for a period of time because of the uncertainty around it and how long it was going to go on. I think now there's that more certainty there. I think, the sort of the dam is starting to break a little bit, if I can put it that way, and you're starting to see that flow coming through a lot more now. The break is definitely sort of coming off.
Yeah. Jason, you were shaking your head there. I don't know if you disagreed.
No, I was disagreeing with the idea that demand was still there. I don't think it was. I think what would you spend your money on last year, I think was the issue. I think that we saw demand just drop hugely. And much of our lending is around car sales, yes, but at the day-to-day expense of people going to work and coming back from work and living their lives, and that had gone away. And that's what's so unusual about this particular financial crisis or shock or whatever we want to call it, was that it's unusual in that this time other expenditure in other parts of the economy were also suppressed as well at the same time, which was unusual. That doesn't often happen when we have recessions. Other bits will pick up, and you could say, well, online did well, et cetera, but I don't think individuals were looking for credit last year. I don't think, because the alternative lending side of things is where we step in when the banks step back. That's where often we can provide a service when the banks step back and the banks are unable or unwilling. That's our primary reason for being there. And we didn't see that last year. Yes, I would say as well that the supply of alternative credit is down as well because of some of the pressures we're under. But demand wasn't there last year, and it's starting to pick up a little bit. But that's why I was shaking my head.
Yeah, that's fair enough. Fair enough.
It's been quite polarizing, hasn't it? I guess because some people, have gone through real challenges and troubles over the last 18 months, and some folks have saved money on the daily commute. So it's been very massively polarizing in terms of consumers. Certainly, we found that a fair bit of demand has gone online, and as I said, we do our own brand work, but we also do work through partners. And certainly, folks have needed to buy consumer goods, white goods. Everybody's been getting a new laptop and a couple of new Apple devices. So I think it depends on what sector perhaps we're thinking about, because it's been quite polarizing, and some have benefited a bit and some have been hit, I think.
I think it does go to the point I was saying earlier on, that polarization as well is not by traditional, high income, low income that's polarized by that. It could be, I think that's where I kind of started from, was the idea that polarization is I absolutely believe it's happened. Some people are in the best position they've ever been in. Some of the repayments in certain sectors are hitting record highs. Repayments are at record highs in certain sectors, and they're being served. But it's hard to work out who's in what. Who's at what role, because it's not the traditional split. Because as I said, a Tesco supermarket worker may be in one of the best positions they've ever been in terms of overtime, suppressed expenditure, increased income. Yet we could have had a consultant, a business consultant, a business consultant that's self-employed that hasn't had any work since March of last year, and find themselves in a very, very difficult position. So it's really hard.
Go ahead.
I would say on that, Jason, just to sort of, perhaps just elaborate on the point I probably made fairly badly by the sense is I agree with your point about the general demand, but my point on demand is more around the fact of that if you're somewhat dependent on credit, and there are a number of people who are dependent on credit and living on credit, there is a demand there for needing that type of credit. It might be, that's I think the polarization point really. So I completely agree. I think what was in the market during 2020, in terms of what lending took place and what people are looking to spend on. Yeah, I completely agree. But my point is more around the fact that people who are quite dependent on credit will always have that demand there. And I think that we've sort of seen aspects of that, maybe not to great volumes, but always seen aspects of that there.
Yeah.
I think some of the new technology is helping us understand these consumers a bit better as well. So I mentioned open banking earlier. I think that's starting to fill a gap perhaps that some of the more traditional credit bureaus can't fulfill in that, to your point, Jason, it's not a traditional split. So we need, better, more recent data perhaps to help us, understand what consumers need. So certainly we found open banking, where we've used it, has given us that additional, boost, if you will, to our decision in terms of, working with consumers to agree the right payment plan for them, or whether a break's better for them right now. I think you kind of have to ask consumers and understand where they're at, but doing that digitally rather than in a conversation, to your point, where you can talk to them, is a challenge. And I think that's where there's almost a new muscle being developed in a number of companies to be able to do that.
Yeah, so COVID, I'll just take a step back before we finish this. So COVID's been, it was a big shock, I think, for a lot of us, personally, as well as sort of at work as well. It's almost like it's like this massive, almost like a bit like a black swan, I suppose would be the term, although we did kind of know about it, so maybe it's not a black swan. But I mean, as a risk event, that took place and it sort of transformed the last 12 months. I mean, are there any other things I was going to ask? Are there any other things you think that we've got to be prepared for? Because I mean, one of the comments was like, if we knew about it, we would have been ready, and we would have had, all the infrastructure in place. It would have been ready. It would have been a lot easier, which is where we kind of sit now, because we spent the last year working really hard putting all of that stuff in place. But is there anything else we've got to think about that we got in the future?
Just to pick up on that, 10 years ago, almost the day, I spent 2 days a week working on what would happen if there was a pandemic. I worked for the government at that point in civil contingencies. I would point out that a pandemic has been the number one risk, national risk that would hit this country for probably the entire period where we've had national risk registers. Pandemic has been the number one risk. As you said, there should be no surprise. The person sitting next to me spent 5 days a week, not here obviously, but the person I was sitting next to at my desk spent 5 days a week working on pandemics and how to plan for pandemics and how to treat them. I think we do what we always do, which is we kind of focus on business as usual and we kind of ignore a lot of what's out there that could help us. And there are other risks, and we just hopefully if this will spark people to do, it will go and have a look at some of those other risks that are out there, because this was obvious. As I said, this has been the number one risk that we as a country have faced since the register came out, which I think was 2008. So there we go. I mentioned that because it's something close to my heart, obviously. But there you go.
Any thoughts on any other long tail risks that might be out there? I mean, so climate change and those being worked on sort of actively. I mean, that's there. I mean, I suppose there's cyber attacks and those kind of things as well. Any thoughts, or we leave that one for another time?
No, I'd agree. I think a cyber attack is probably it's probably the one that scares me more than anything else, because it's just how it can come and the impacts it can have. And and if it hits a major supplier, it hits an organisation. It's potentially at the extreme a business ending sort of event. So it is catastrophic in that. It can be catastrophic in that regard. I think to Jason's point on the pandemic, I would probably agree. I think there's a sort of probably a bit of a fallacy there in terms of, and maybe it's just a mentality thing in the UK or Western Europe, that these things happen once every generation or happen once in a blue moon, so to speak. We've had a number of pandemics really over the last few years. Maybe not as bad as this, admittedly, but we've certainly had instances of it, and there's probably a lesson to be learned there. How do we prepare ourselves better for it? If you take countries like South Korea, who they prepared really, really well for the COVID attack, and had their issues, but certainly not the issues that we've experienced probably in Western Europe. So I think there's definitely something there and it's interesting, from what Jason was saying there, that we have a risk register. The risk register seems to have worked to a point. It's just a question of what action we've taken to address that risk.
So it sounds like it's very much sort of like a lessons learned and having it top of mind going forward, and then going back to whatever's on the risk register.
Well, to a point, yeah. I mean, it's easy to say lessons learned, I think, as well, and I think it's more about what is that tangible action we're going to take, how seriously we're going to take it. Now, you always have the balance between, the likelihood of it and the cost of doing it and how far do you go with it. But on the other side, if you look at the impact of this one, who's to say the next one won't be even more impactful in terms of what it does in the economy shuts down for 2 years. That's the thing to look at, and we need to be a bit more, if there is a lessons learned, we need to be more proactive in what we do and take action.
Yeah, I think the lessons learned as well need to be, we don't all need to go away now and write a pandemic plan for the next pandemic. I used to sit next to, at one point, I used to sit next to an emergency planner who worked in Dumfries and Galloway in Scotland, and he was involved in the Lockerbie incident. And immediately after that, everybody started doing plans for what would happen if a plane fell on a town or a city, and that was the next thing. Of course, the next thing that hit him was foot and mouth, which was awful. And he said, the lesson I learned from that is it's not about individual events, it's about the consequences of that and the capabilities that you need to develop. So the capability is, how do we work from home? How do we deliver the service if we didn't have access to the office? It's those kind of things, rather than how would we deal with a pandemic or how would we deal with... It's got to be about that. And a lot of that is about technology that has developed over the last year in response. Now, how do we use that and how do we improve that so it's ready for the next thing, which will not be another pandemic. It will be something else. But we will need those capabilities that we've been developing over the last year. And as I said, technology will be a big part of ensuring that we have those capabilities.
So that's a good segue into thinking about the future. And maybe Dean, just comment around the technology point. I mean, what are the technologies that we need to think about, and how do you sort of see the future or a prediction for the future really sort of panning out?
Well, I mean, none of us have got a crystal ball. I think Steve mentioned earlier on, keeping an eye on the GAFA companies, Google, Amazon, Facebook. It's good to have one eye on them. And when you start to see what's coming out of Apple credit cards, that's gone quite quiet. But I think really interesting to see what comes out of some of the GAFA companies, but also looking at other economies. So we're seeing across BNP Paribas Group that we shouldn't just look in the UK for innovation. We can, and we can tend to be a bit complacent and think we're at the head of the game, but we're seeing some really interesting stuff out of Poland in terms of using open banking, and some of the analytics we're doing in South Africa in group is really interesting as well. So I guess it's sometimes innovation comes from somebody spotting something and then taking that and running with it. So I think first of all, it's kind of eyes wide open and look broadly, not just in the UK. I think, as I said earlier, I think 1 + 1 = 3 is a phrase I sometimes bore colleagues with. But when we take what aggregators are doing, who've grown immensely in the last 15 years, and you link that to something like open banking, along with AI, and you get a really interesting capability to help consumers find what the deals they need and at the right time and the right product. So I think some of this may well come from things being joined up, and some of the topics we've talked about today, clever people find a way to weld that together to make a really exciting proposition. So we've seen companies like Freedom Finance create a consumer score using open banking. That's going to help consumers, and we're also seeing Experian do things like Boost, which been successful in the US now in the UK, allows consumers to take a bit more control over that credit score. And by sharing the whole idea of open banking was to share your data and help consumers get better deals. So that's starting to become real, and the pandemic pushed that because lenders were asking for more information to make better decisions. So some of the things that have been nudged forward in the pandemic, when you join them together, I think we're starting to see some really interesting propositions. It's not future, it's near future. But I think some really interesting, some of the apps like Yolt, which help you manage your money, they're developing into money coaching apps. So when we think about people who've struggled during the pandemic, it's really helpful to see all your finances in one place, because then you can start to manage them. So I think, it's going to be on a mobile, isn't it? But it's going to be how some of these propositions are pulled together.
Yeah.
Okay,
that's good. I mean, and Steve, what are your thoughts for the future? And so, if you're going to put down a few predictions around how you think we're going to evolve from here.
Well, that's a good question. I'll just get the crystal ball out, like Dean said. I think it'll be more of the same. I think technological advancement, doing digital first, is definitely attraction for firms to do that, and customer alike. I think firms have also got to find a way of dealing with customers who don't want to do that, or who are reluctant to do it, and some of that could be generational issues as well. I think how firms use data will definitely sort of change and continue to grow. Better insight into consumers and their behaviours and what they do, and then finding products and services that match that. I do wonder just how much further whether there'll be a slight pause in technological advancement during the next 12, 18 months or so, largely because I think a lot was front loaded for the benefit of businesses for last year to get people working from home. But I do look at it in terms of, budgets might be tight and it's a little bit, we want to grow the business back out. So maybe we've got to wait for the business growth to come through before we can spend the next level of cash on the next iteration of it. So there may be a slight pause, and we might not see the ferocity of change over the next couple of years as what we've seen in the last 12 months or so. But I do think that the trajectory is generally upwards. So I think it's more of what we've got, but probably more insightful as we go through it in terms of how we see customers behaving, what customers want, and having more flexible relationships. To recognise that it's never a straight relationship in terms of a straight line. There are peaks and troughs along the way.
I was going to say, I guess with my kind of position which is slightly different, and I'm looking at regulators. I'm looking at the public as well. And I guess my question, which kind of links to what the panelists have just said just now, is how do we take regulators, politicians, customers with us as well, particularly if we're talking about trying to scale this up, make this wide scale, rather than just something that early adopters will grab and use. If we're going to take it to the entire population, then we have to think about how do we explain that to the entire population as well, and how do we bring them. And I think I see that one of the questions that we were asked is about open banking. Open banking has come up a couple of times already in this conversation, but it's a good example of how does that develop? How does that, and I think it's very difficult to kind of talk about that because there are so many vested interests already. I'm agnostic, but I know there are so many people whose commercial interests are also in open banking or against open banking, and I can see that. So it's difficult to get a true picture, but it's a good example of how do we bring those people with us? How do we bring the public with us, which is not probably a task for technology people. It's a task for other people who are kind of got an expertise and engagement in building trust and building confidence. How do we do that? And I would say as well, the other part of that is how do we bring regulators and politicians with us as well? Because already we're talking about how do we explain artificial intelligence? How do we explain machine learning to regulators and politicians? How do we explain what that means and how it works? Because just saying it all happens in a black box is not going to cut it with these individuals that have an influence over our success. It's not going to cut it with them. And of course, one of the principles that we all live by under the FCA is we need to be in a position where we can be regulated. And that means that we need to be in a position where we can explain things in very simple terms that could be understood by a supervisor or a FOS adjudicator or an ombudsman. Needs to be explained in a way that makes sense. And we can't just say it all happens over there in a black box and we're not quite sure how it works. So I think there are real challenges which are not about technology, and it's not even about developing the product that uses that technology. It's also about how do we then kind of bring other people with us, other people that will have an impact on our success or failure. And I think that's a difficult task, and one that I'm sure people will be putting their brains to over the next year or so.
Yeah, and I'll give a blatant plug for the open banking session we've got later on today as well. So I know we're going to be talking a bit about some of the adoption rates and some of those things around trust, because there was a question that was asked around that.
Yeah.
So I know we're going to cover that a little bit later. There were a couple of questions that were asked just before we finished. So one was just really around thoughts on utilizing technology such as blockchain for competing lending transactions. So any thoughts around use of blockchain? And then the other one was around identifying vulnerable customers, which I think we talked about a little bit around identifying customers up front. But any thoughts on those? Maybe just take the blockchain one first, just real quick.
I think it's about with all the technology. I think Jason mentioned it. It's about horses for courses. So blockchain, very transparent. Whether you need that in your use case, I guess would be my question for Niral. Is I think it's all about what's the use case, what's the benefit of that technology. Do you need transparency and openness in that use case, and then I guess that could be one of your solutions. But for the sake of it, because it's a sexy technology, I think you need to think about the use case benefit for.
Any final comments on vulnerable customers or
on vulnerability? I think we picked up on it earlier on that there will be technology there that will help with vulnerability. If I have one concern, it is around what does that do in terms of access to credit? And I'm not saying we shouldn't identify those that are vulnerable. Of course we can. Of course we do. But one of the things we do as we become clearer about risk and the risk of individuals is we lose something, which is that we share risk. And that is one of the things, that's one of the ways in which financial services work. It's one of the ways in which we allow access to credit to those people that may be on the edge of creditworthiness, is by sharing their risk with a wider cohort. And I think that there are issues around that. I think that we have FCA figures that show that half the population are at risk of vulnerability. Well, if you get to that point, it is kind of like, well, what do you do with that information? What does that mean when half the population are at risk of vulnerability? Does that mean that everything is built and developed for the vulnerable customer? And do we mainstream that? Do we find better ways of developing approaches to individual vulnerabilities and how we it's a big question there for lenders going forward. But I think technology will help us to identify some of those vulnerabilities. But I think, panelists mentioned it earlier, there is a real risk by focusing on vulnerability as our way of identifying, focusing on data technology as our way of identifying vulnerability. We will miss some of the more vulnerable that don't use the technology, don't use the smartphones, don't use that technology on a day-to-day basis, or don't trust it. Don't trust that technology.
Well, I think the other thing I would just add to what Jason's just said there is that it's not just at the outset as well. It's through the customer journey, it's through the customer life time with that particular provider. I think if as a financial service industry we can get better at sharing information and make it easy for customers and recognise signs of vulnerability, because it is quite transient in a lot of customers, then that's all for the good, really. But it's one that just sort of just goes through all the journey, not just at the outset.
Well, I think we're almost at time now, so I just wanted to thank everyone for joining. So I think that was a great conversation, really super interesting, talking a bit about, say, lending futures. I think we're up for time now, so thanks ever so much. I mean, the next session I think starts at 10:45, which is on credit risk. So I think we're just going to take a short break, if that's right, Colin.
Yeah, that's right, Chris. Thanks, everybody. Really good, really interesting conversations there, and all the topics I think touched on what we're going to be talking about in the next sessions that we've got coming up on credit risk, open banking, and fraud. So you guys have set that up perfectly. So that's brilliant. Thank you. Whether we meant it or not was another matter, but it's great. So no, it's fantastic. Thank you. And obviously, Chris, thanks for running that session. It's been brilliant, really interesting from the outset. It's just a minefield, I think, that we're looking at moving forward in terms of predicting anything generally. But it's great. So I'll just round up by saying thank you, of course, to Chris, Dean and Steve, of course, and Jason for their brilliant insight on that. That was really good. We're going to have a little bit of a break now. For those of you who've signed up for the credit risk session, you won't need to do this, but people who want to join the next session, then there's a link in the agenda information there. Have a click on that. You can get registered. We start the next session at 10:45. Have a login. But for now, I'd like to thank everybody for tuning in, and hopefully we'll see you soon at a future session or a future event. Excellent. Thanks a lot, everybody.
Thanks,
Cheers.
everyone.
Thank you.
Thanks.
Thank you.
Bye-bye.
Bye.